Good evening, I'm Giuseppe Basile, I'm the NSN trader. You can find the website www.fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening, today is July the 30th, 2014. Actually, it's 10 past midnight time in Toronto, so it's the 31st. And you already see the new bar being formed here on the euro dollar. This video is weekly midweek review. I only I offer register on Wednesdays, and typically I provide this review on the website, and this review actually is coupled to the weekly review I provide, on the other hand, only to my newsletter subscribers. So if you want to receive my newsletter, go to my website and subscribe to it. It only takes a few seconds. I hate spam as much as you do, and you can actually unsubscribe at any time. I try to provide to my subscribers quality content, and I'm sure that you will be pleased. So anyway, thank you very much for the new followers, and I hope you appreciate the work. So let's start from the euro dollar here. In this video I'm going to review for you 13 markets, and on some markets I'm gonna go very quickly, on other markets I'm gonna stop a little bit more. So congratulations to those who took the short with me here. 136.70 was the level to short, and as you can see, we went into the first target, 134.24, and actually passed it. And no wonder the market actually reversed this 133.76. I think from this point we are going into a multi-week retracement here in the euro. The euro is not likely to continue lower. If it does, the second stop is going to be this 132, 133 level. However, I think that we're going to get some traction here if program trading takes profits, and some algorithms will try to reverse this market here, but I think this market has not completed this move lower, and I'll be happy with the move lower only when this market will get to 130.20. So we are witnessing a continuation lower in the long term, but in the short term actually this market could actually correct all the way into the halfway back from highs near 140 in at the beginning of May here, down to recent lows, and this would mean price back to 136.80. So I sold half of this position and will keep the other half and see if this market actually keeps moving higher. It's possible to add to shorts at this 136.80. This is the high probability trade, and the market then would actually continue for 136.80 here down into 132 and potentially 130. So speaking about here a 400 pips move, or potentially a 600 pips move. The SP 500 has continued its slight correction lower here. It didn't make it to this 1993 level. That was the first target for this move. But this market is still correcting laterally here on a 1948 area of resistance. Only if we see this market below 1940, 125 and 1941, I would look for a stronger retracement, and that retracement could actually come from into an extension long, and this extension will be traced from previous highs to new highs. So if we break 1941, we should move into 1908. Moving to the dollar index, as you can see, this market reached the first target at the same time as the euro dollar reached and hovered around that first target. So at the moment this market is very extended. This move has completed. So what I'm looking for is a retrace either into the lows to highs here, or potentially this could be a retrace into the higher lows here to highs. That's not really very important. The euro will tell us the story. So at the moment I will stay with the longer retracement into 80-70 here. If this market gets there, then we're going to see a reaction. Notice how this first target lines up with previous highs, but the real reason why this market is correcting is because there is program trading taking profits on this futures market. And of course, the euro dollar also being around an area of support after first target was hit, is going to hover around that area, and there will be some profit taking going on. Moving to the gold futures, I mentioned that this market is into a lateral move now since a few months. It's possible for this market is responding to this 1319 1320 level, an area of resistance, and this area of resistance has the potential to keep pushing lower this market into 1280 and eventually even lower into this lower bound here. I use this only for pleasure. I don't use these levels, these trend lines, and who follow me knows very well I only use specific and select Fibonacci levels. Moving to the US dollar versus Japanese yen. By the way, I'm writing these days a review that will 6-month outlook on the Japanese yen that will be soon published on fxtrade.com, I believe next week. So I look forward to hear your comments on that article as well. You will remember that last week I mentioned that this market could be inverting. Actually, I was not expecting such a strength here, and clearly the US dollar, the Japanese yen has been clearly awakening against strengthening against the Japanese dollar here. The Japanese yen. I think we are going to see a retracement now, and I think this move is here to stay. We are going to see some weakness in the US dollar as well, so there are two possibilities: a retracement into the all the way halfway back here. It's not to be excluded. After this strong move, we should see additional participation in this 102.08, so a bounce there and a move up into 103.50. It's also possible for this retracement to be shallower, and it also depends on how weaker the Japanese yen will be. So the other level to watch is definitely 102.43. Moving to the euro versus the Japanese yen, I mentioned that this market was at important support, weekly support, and today we got this strong move higher. So this level 136.80, it's a long-term level, and it has the potential to bring price higher. Now the euro is probably going to correct higher, so we should see this market continue into this lateral move here on top of weekly support 136.80 for some time. So although the euro is weak, the Japanese yen is clearly weaker, meaning that the activity of the Bank of Japan, the so-called JQE2, is actually clearly still affecting the Japanese yen here. So when we move to the 4-hour chart, we can see that clearly this measure move is actually this price move actually shows a movement in extension. So there are two areas we have to watch. One would be the area of the next extension long here, that's 137.55, but the market could also come back all the way as usual, could come back all the way halfway back, and then that's a very good entry opportunity there. So be on the watch out for this 137.11 as well. Moving to the pound versus the Japanese yen, you will remember that I mentioned this area here, 172.46, and the sequence of measure move on the 4-hour chart and 15 minutes clearly has failed here, and you will remember that we had an extension, potential extension short here. Unfortunately, the violation only came today, Wednesday, with price moving above 163.50. On the smaller time frame, the 15 minutes, the one level, the very aggressive level that could be used would have been this highs to lows here. And as you can see, once we broke 173.13, then the price eventually retraced, and this could have been a very good entry, and the price continued higher. So always trust the fib stalking technique to test, procedurally test support and resistance in presence of these areas of larger support. So the area of larger support here on the daily can clearly be seen, and I mentioned this area now more than 3 weeks ago. 172.50 was the area to watch. Moving to the euro versus Canadian dollar, I also mentioned that this pair actually is going through a correction, profit taking, and there are two possibilities for this market, considering the strength that we are probably going to see in the euro in the coming days and potentially in the coming weeks. We could actually get to this 147.10 area here, and then reverse and continue lower. But there is also the possibility that the euro versus the Canadian dollar is going to actually behave like the euro dollar. So there is a possibility for this market to correct higher into 150, just then to reverse and continue lower. Let's remember that on the weekly time frame, this market is in a short. Continuing the pound versus the US dollar, I mentioned this area 169.42. I also mentioned that around this 171.36 we had an area, a second area of profit taking. So clearly program trading is taking profits in this market, and this area it's really not a very important or reliable area of support, and as you can see, price is piercing through it. So there is a possibility for this market to behave actually to actually behave in a sense. Actually, if we consider the foreseen US dollar weakness, there is a possibility for this market to bounce from these levels, and we have to remember that we actually we can actually also though continue lower, and that depends on a first test whether 168.82 will be built on the downside. Unfortunately, there is not a lot of structure, as you can see in this price. So if we continue lower, we could use the 170.57 as our anchor and trace from lows to lows. I'm not going to trace in now because we still don't know what this market is going to do. Not very interesting at the moment. It gave very good trades in June, but then from July, it was very difficult to trade. So no need to trade this market. There are a lot of opportunities in other markets. For example, the Australian dollar versus the US dollar. Congratulations to those who actually took the short that I've indicated, and you will remember that this market was moving higher in a traditional move, and then there was a violation of that traditional move, and on the 15 minutes we could even be more aggressive, and you will remember that I actually traced a level also on the 4-hour chart, visible on the 4-hour chart, from highs to previous highs here, sorry, to new highs, and we had the break and then the setup on the 15 minutes chart too. So as you can see here, we broke the 094.32 and then price traded the all the way halfway back in the other direction. So it's a very good entry, and I know that some of my followers took this trade as well. I'm very happy for you. Congratulations for acting on this one. And as you can see now, this market is actually giving space and giving way here. So we might get a retracement higher, and that retracement might get even price into, you know, the all the way halfway back here from highs to lows. But generally that would become only another opportunity to sell this market in a continued move lower. So I'm not sure whether we get that retraces to that level, but as soon as the sequence of measure move higher in this daily move higher, if we get a move higher, will expire, will finish, then we will start a continued move lower. So congratulations, keep your shorts, and the first level I'm gonna look at, it's 09080 here. The next market is US dollar versus the Canadian dollar. Again, this market now reached our second target on an extension long that can be seen also on the daily time frame. As you can see, that second target was aligned to the previous to that level, that area of resistance. So at the moment this market is still long. However, you know, there is an aggressive potential entry short here, and if price breaks this this level, so the trading plan here is very clear, risk is very limited. If price breaks this, you can take a short here. I'm going to show you on the 15 minutes how you can do that. If price breaks 108.39, you are back into the short scenario here, and you would be very well positioned if you enter now. And if that happens, then we would see price moving into this 104.87. Is that possible? Yes. We could see here a correction in the dollar index that would actually bring this price lower as well. And when you move to the 15 minutes, it's very interesting, because you will remember that I've actually quickly analyzed the 15 minutes on Sunday, and this is the 15 minutes chart for this market. And you will remember that there was a setup here, first and second target, then actually then we saw a jump in the anchor here, and actually price went into this first and second target here. So let me remove the others. First and second target, and the next measure move in the sequence failed. So to me, this is a short at the moment. It's a bit risky here, so the stop will be at highs, but if it breaks the 108.83 here, there is a potential for a continuation lower. Always remember to mind risk, not remember, actually that's a rule, mind risk, and take half out if you get one unit of risk in gain. And that's the way I do it, and then I use market money to multiply my gains. So no need to rush here. This is US dollar Canadian forex 15 minutes. Next one is the New Zealand dollar here, and the New Zealand dollar has been hit by selling here, which is okay. Also considering the strong US dollar. Now there are three potential scenarios still, unfortunately, for this market. So see, this market is in undecided at this stage, so you don't have to get involved when there is an undecided market. What can happen here is that this market can reverse now, and if we break the all the way halfway back, we are formally in a lateral move here, a correction, lateral correction, which still has a target at highs, above highs. So this could actually happen, and the reason for that is the sequence of measure move here on the 15 minutes has failed. As we can see here, we had this break 08503. So what could happen here is that this market start a correction higher, a profit taking correction into the 08649. If we get into 8694 or above it, then it's a confirmation of a lateral move. So not really, I wouldn't get involved in this market if you're not in a long. I removed my longs I had in this area. You remember I called these longs back in at the beginning of June. A lot of people were calling for a multi-year move lower here, and actually I also published an article on fstrade.com showing that this was an opportunity long. So, and now it's time to wait, and this market will show its ends. If it goes above 08694 and then reverses, that's another opportunity to short the market. But it will also be an indication that this market is moving laterally, so you have to be very, very careful. And the last one is for is the Australian dollar versus New Zealand dollar. There was a request of a follower, and as you can see, when we look at the larger time frame here, we can see that this market actually is responding to highs to lows here. So it's not a moment to get involved with longs. We also have to notice that on the same page that this market has been in a sequence of measure move short, and recently this sequence has failed, as we can see here. And that confirmation came when we saw the price moving above the long-term 109.23 level. So what can we say is that this market in the long-term weekly time frame is in longs, and now it's correcting on the daily time frame. Where it could go, it could actually go into this 107.62 and then find support there. I could also break the level and again test lows. However, I think that it will possibly and very probably find support at this 107.62. This is it for today. This video is a little bit long, but I like to provide explanation and provide entries and valid trading plan that provide you with multiple reward to risk ratios, much bigger than 1 and much bigger than 3. Sometimes that's the number widely accepted. I do not subscribe that. There are opportunities to time this market on the 15 minutes, even on the 1 minute, on the 5 minutes, with unbelievable reward to risk ratios. So as always I say, start looking at the market differently. Follow my work at www.fibstalker.com. Thank you very much for your attention, and I wish you a great evening and a great continuation of your trading week. Bye now.